I mean, are you ropeable about this?
I think it kind of sounds like I am. It's such a nothing burger for a big issue, and at the same time, if everything that the government wants to have happens, we get more expensive, dirtier power rather than cheaper, cleaner power, which could be available to us.
That's Newsroom senior political reporter Mark Dulder, and the thing he's calling a nothing burger is this.
It's a pleasure to be here today to share the government's energy package to secure the future of New Zealand's energy system.
It includes a promise from Finance Minister Nicola Willis that she's willing to spend taxpayer money on projects that will increase electricity generation.
In response to the review, the government is progressing 2 key work streams that will help ensure that we have abundant and affordable energy.
But not abundant and affordable immediately. Also, no asset sales, no big solar strategy, no instant solution to our soaring power bills. Critics say it falls well short of Energy Minister Simon Watts' promises of fundamental reform and New Zealand First Associate Minister Shane Jones's grand plans.
We should start by nationalising the ability within the power system to offer affordable energy during winter. I'm all about creating an entity called Fossil Co, so that the Crown has got control over security, and we don't leave security to private profit-driven entities who only do well when the market is shorted.
I'm Sharon Brett-Kelly, and today on The Detail, the $500,000 Frontier Review and why the government's rejected nearly all its recommendations. Also, why the giant gentailers' share prices took off after the government released its plan. So, this report, the Frontier Report, was it a complete waste of time and money?
It's a fair question. It's one that I asked the Energy Minister and Finance Minister when they announced their report or their response to it. It certainly doesn't seem to have concluded the way the government anticipated it to. And I don't know that there are very many people who would have been particularly happy had the full recommendations of the Frontier Report been implemented. I don't think it was particularly beneficial for any one player in the market, maybe unless you were a fossil fuel company, in which case you're still pretty happy with what the government's doing anyways.
So are you saying that the recommendations, the 10 recommendations, 8 of which the government rejected, they weren't strong recommendations for the sector or for customers?
Yeah, the report made 3 key points that it recommended. First, that the government divest its holdings in the gentailers. Second, that the government then use that money in order to fund all the thermal, which is gas and coal generation in New Zealand, through contracting or directly owning it. So kind of taking one foot out of the market by divesting from the gentailers, but then becoming the operator of all the fossil fuel generation in New Zealand and investing in building new fossil fuel generation as well. And then the third key point was around condensing the 29 lines companies into 5 super lines companies that would gain efficiencies of scale. The government rejected those. They rejected 8 of the top 10 recommendations. A few of the littler bits of advice that sat under that they accepted. But it's not just the government that was unhappy with these solutions. There were 2 peer reviews that were conducted by international energy experts and consulting firms, and they were, in consultancy speak, pretty scathing about the Frontier Review, saying basically they didn't think that there was an evidence base for its diagnosis of what the problems were in the energy market, and that they didn't really see or understand how it had got to the conclusions it did about what should be done.
Well, who did this review?
So Frontier Economics, they're an Australian firm. They're relatively well respected across the ditch, but they do have a reputation for, certainly their managing partner, the co-founder, Danny Price, has a reputation for being very strong on fossil fuels and gas, coal, and also on nuclear, and very opposed to renewables. He said back in 2017 that renewables were turning Australia's grid into a third world country.
The system is becoming increasingly unreliable.
Is it fit for a first world country?
No, presently it is, but we are heading towards a third world power system very rapidly.
Before the most recent Australian election, Frontier wrote a report for the Conservative opposition, arguing that nuclear would be the solution to Australia's energy problems, not wind and solar.
The coalition's trying to win the upcoming election by arguing that rather than investing in readily available renewable energy sources, we should start constructing a nuclear power system from scratch.
So they have a little bit of a view, I think it would be fair to say, and potentially brought that over into their work here.
So presumably Simon Watts, the minister, must have known that this company had a leaning.
Yeah, I think we can't get into everyone's heads, but it was something that's not a secret, I think it would be fair to say. It doesn't take a lot of Googling to turn that up. Remember, the government's policy package that it has announced is still very fossil fuel friendly, and so it's not necessarily that direction of travel is where the government has gone offside with the Frontier report. It's more Frontier's recommendations for quite significant structural change to the New Zealand energy market in a way that none of the players in the market, not the gentailers, not the independent retailers, not the big power users, are really asking for any of that change. It's not that they came back and said, we think you should break up the gentailers or anything like that, stuff we've heard a million times before. These were kind of out-of-nowhere solutions that even the peer reviewers, who were also international, looked at it and said, we don't really understand why this is where you've landed.
Yeah, so where have we landed?
There are two potentially big things that are being done. There's 10 actions overall. The ones that caught my attention were the government has launched or is about to launch a procurement process for a liquefied natural gas import terminal. The details there are pretty thin. The government's been talking about LNG, which is liquefied natural gas, for a little bit more than a year. Basically, if we have a terminal, we can import gas from overseas, which can supplement our existing domestic gas supply. Because right now, all the gas we use, we produce here. So if we want to use more, we have to produce more. And there have been problems with that. We had the ban, but also we haven't had a really good commercial gas find in 2 decades. So LNG kind of opens up another opportunity. This procurement process, again, not a lot of details there. Does it mean that the government would be paying for it or building the facility or operating it? That's all up in the air. We're going to see what the industry comes back with. The industry has looked into LNG over the past year and has released a report actually in June, 2 reports that showed it would be, there are some significant feasibility challenges there. The second thing that caught my attention that could be a big deal for the energy market, good or bad, but a big deal, is changes or promised changes around the regulatory regime to incentivize investment in what's called firming generation. It's basically generation that we can turn on and off or up and down with a switch. So it's not solar or wind, which only work if the sun is shining or the wind is blowing. It's not necessarily really geothermal either, which is pretty much always on. But it's more something like gas or coal or maybe diesel or hydro. So they want to change the market to make it easier to create incentives for building out this new firming generation, because we're building lots of renewables, we're building wind turbines and solar farms left and right, but the Frontier report argued, and the government has agreed, that we need more firming generation to back that up, to even out those peaks and troughs. But again, the details are really thin here. We don't know what options are on the table. We don't really know a solid timeline for when something might be in place.
How does that tie in? Because I know the big generators are building up a stockpile of coal, aren't they, already?
Yeah, so there's been this arrangement that's also been worked out on the sidelines while this Frontier review is going on, while the government considered its response to the report, between the gentailers, where they've agreed to create a coal stockpile to fund the ongoing maintenance as well of one of the turbines that Genesis runs at Huntly, so that it's available in the event of a dry year or other sort of energy shortage situation. The Commerce Commission has just given a kind of preliminary tick of approval there to say, yes, this is working together. Normally this would be anti-competitive behavior, but the public interest argument here is pretty strong, so we're pretty happy with that. And much of the industry is supportive of that. Not everyone, but many players are. Arguably, that goes quite some way towards solving the problem that Frontier identified, which is not really news, that we have dry years sometimes, and that when that happens, we need something to come in and fill the gap where our hydro would normally be generating.
So, just so that I understand this, earlier this year, was it, the government said we're going to come up with some groundbreaking solutions to our current energy problems. They commissioned this report. From this report, they came up with a plan to solve our energy woes, and the plan has just been released, and that is aimed at tackling the high prices, tackling our unreliable energy sources, giving us more security.
Yeah, I think that's a fair summary. And then the context around it is, they've commissioned this report. It landed on the minister's desk, and the key recommendations there were obviously unworkable. They're also politically unworkable. New Zealand First is never going to agree to selling off the rest of the gentailers, and ACT is never going to agree to the government taking a really interventionist stand in the market by running all the fossil fuel generation. So it was dead on arrival. The government picked out the little bits that they could stomach. There were some small regulatory changes and other kind of tweaks that they have picked up and will adopt. But the big picture vision that was in that report, which may not have been a very good vision, but it was at least a vision, isn't really filtered through to the government's package. It's hard to tell what the overarching rationale or aim is with this package of measures that the government has kind of cobbled together from things they could agree with in the Frontier report, stuff that they're already doing. One of the actions is their RMA reforms, which obviously they've been working on for 2 years, and some stuff that they were already interested in before, like the LNG, which the Frontier report said should be a last resort for New Zealand, that it would be costly, that there were technical and feasibility challenges.
Firstly, we are investing in energy security now. To manage the dry year problem and bring prices down, we need a reliable power source that can be accessed quickly and on demand. The government will step in to commence procurement of an importation facility for liquefied natural gas. LNG is a proven way to bolster domestic gas supplies and is used around the world.
You and I have talked about the LNG terminal, or, talk of building a terminal. And I think even this report, doesn't it, outlines that it would probably be a small terminal, it would be costly to build, and that the gas would be expensive. So it doesn't really address this issue that we're all facing of high prices.
Yeah, I don't see a really clear rationale here for how this package of reforms lowers power prices in New Zealand. The government's argument is that partly power prices are higher because of that unreliability, because of that risk of dry years. So there's a premium that's charged. So if we can have backup generation, coal or gas or whatever, that is available in the event of a dry year, that takes some of the uncertainty out of the market, and that premium goes away. But if you have that gas and coal, well, fossil fuels are expensive. Solar is the cheapest form of energy ever invented by humans, according to the International Energy Agency, which was set up, by the way, as a international group to manage oil production and distribution and development. So not a bunch of radical greenies over there, but they say it's the cheapest form of energy we've ever invented. And that's what's available to us in New Zealand. And instead, we're going to say we're going to rely on gas and coal. And you're right, the LNG would be double the price of our current domestic gas. It would be $20 or more a gigajoule. Right now, industrial customers in the first quarter of this year were paying $13 a gigajoule. So if you're an industrial customer, your gas prices could go up 50% if we build this thing. And the wholesale price of gas was even lower, so it's close to doubling that. And it only, if you do the small scale facility, meets about 8% of our annual gas use. So it's not like it shores up a vast amount of gas either.
And that's the thing, isn't it? I mean, the access to cheap gas is one of the issues that a lot of these businesses are grappling with at the moment. This is the reason why we're seeing sawmills closing down or paper processing mills closing down, because of the high cost of energy and gas in particular?
Windstone Pulp obviously closed permanently. OG Fibre Solutions have closed a number of their operations, and right across the board we've seen companies either closing for a short-term basis or reducing their production.
So we've got this gas shortage in the sense of we want to use more gas than we have available. What do you then do is the question. The government solution is, well, we go and get more gas, even though that might be a lot more expensive because what matters is having the gas. But there's an alternate solution, which is to say, well, let's use less gas, right? The previous government had a gas transition plan in progress. They were writing it up to be able to clearly forecast and talk to the sector about, here's how we see this working. Here's how we see us stepping away from gas. The new government cancelled that when they came in because they don't believe we are stepping away from gas. The problem is we still haven't been finding any gas, and so what do we do in the meantime?
Big energy users call the plan underwhelming. John Harbord chairs the Major Electricity Users Group.
There's some good things in there around reducing our over-reliance on the weather and incentivising the build of new generation. Hopefully that will lead to lower prices over time, but there's nothing in this that's going to make a difference to affordability over the next decade. And so the risk of sort of deindustrialisation, the loss of jobs, that's going to continue. This doesn't address that.
Independent electricity retailer Electric Kiwi is also underwhelmed by the government's planned changes. Here's CEO Huia Burt talking to RNZ's 9 to Noon.
We're really disappointed. This package shows a lack of ambition and a lack of understanding of how Kiwi households are really hurting from high energy prices.
What did you expect? Because you've been watching this space for a long time, Mark. What did you think would come out of this plan, given that Simon Watts was promising fundamental reform?
Everyone was a little bit disappointed by the scale of what was announced on Wednesday, just because the government had been making it seem like something bigger was coming. I think there was a sense that there would be some changes to the market structure, whether that looked like breaking up the gentailers or enforcing accounting separation there, or even changing how the market works. Right now it's what's called an energy-only market. The only thing we're bidding on is power at a certain amount of time. But there are other tools you could use, like something called a capacity market, which basically helps incentivize having backup generation that's available even if it's not used. There are a lot of ideas for what could be done to change the energy market, to fix it if you think there are problems. I don't think many people were looking at what the government has said the problems are. Because there's one other element that we haven't talked about here, which is Nicola Willis's letter to the gentailers as well.
We will put our money where our mouth is on energy security and make clear that we are prepared to support capital funding requests for commercially rational generation investments that support energy security.
She's written to the gentailers to say, we've heard from the Frontier report that you think if you wanted to develop a big new gas or coal station or whatever else and you needed money, capital for that, the government won't stump up to help pay its share because the government's a 51% owner. So if they do a capital raise, the government needs to participate in that in order to keep its majority shareholding in the gentailers. So Nicola Willis writes this letter and she says, don't worry about that. If you have a commercial proposal, come to us. And if it's a good one, we'll check it out. But if it's a good one, we'll pay the money if it helps with New Zealand's energy security and if it delivers a return for shareholders, 51% of whom are the government. And the government is saying this is the big thing. This is the big part of their energy reforms. This will change everything. It's hard to believe that the gentailers really feel like they are capital constrained, like they don't have enough money to go and invest in generation if they need to. For starters, they are investing in generation, in new wind and new solar, in new geothermal in some instances. Secondly, they paid more than $1 billion in dividends last year, 51% of which went to the government. Is that what you do if you don't have enough cash to be developing projects that you think are otherwise greatly needed? And we also have a counterfactual, right? Because Contact is a gentailer, but they're not state-owned. So if it was the fact that the government having a shareholding in a gentailer stopped that gentailer from making investments that would otherwise provide a big return in the form of a gas or coal-fired power station, then surely Contact would be building a bunch of gas and coal-fired power stations because it knows its big competitors can't do that because the government's got them constrained. So none of this really adds up to say, this is the problem, this is why gentailers aren't investing. There are a lot of theories as to why gentailers maybe aren't investing as much as they should be in new generation. But again, it's hard to believe that a letter to the gentailers from Nicola Willis saying, we'll give you the money if you want it, and that's always been our position, by the way, is going to suddenly radically reshape what's happening in the energy market. Unless really what the letter is indicating to the gentailers is, we want you to start building new fossil fuel power plants. Start doing that, please. Then maybe you see that happening, but that's not for the reasons that Nicola Willis and Simon Watts are saying.
My understanding is that the gentailers don't want to build too many projects that create so much energy that the price of energy goes down because the market is flooded with it.
That's definitely one of the theories about how the market works and why it feels like we're maybe always just at the precipice of running out but never really running out, is that, there's an argument, there's a financial incentive for the gentailers in particular as the major kind of players in the market to not build too much power, because the moment there's no gas or coal generating and there's just a lot of hydro and wind and solar, energy prices drop because it's free. The sun is free, the wind is free, the water, the rain is free most of the time. In the week before the government made its announcements, the average wholesale power price was $5.67 per megawatt hour. Remember, it was more than $1,000 at some particular half-hour periods last year in winter. And it's that low because renewables are cheap. So there's a valid question here, right? If we want to see a transition to a more renewable-heavy market, potentially a fully renewable market, how can you have a system that properly incentivizes that when it would mean under the current system that suddenly you're not making very much money at all for your power, which is a big problem because it is expensive still up front to build a solar farm and a wind farm. And it's a much more commercial proposition if you then get to charge the prices of gas generation because of how the market works.
It feels to me like if anybody benefits from this plan, it's the gentailers. And it is interesting that their share prices jumped quite significantly after this plan came out, gains of $700 million to the three firms. That was the gains in market value.
Yeah, I think there's a couple things that you could kind of put that to, noting I'm not a stock expert by any means. But I think it's probably a mix of, A, there are concerns that the government might really come down hard on the gentailers here, and they clearly did not. And so you'll have had some relief there, and those assets will have kind of increased in value, the stocks, because suddenly these aren't companies that are at risk of being broken up by heavy-handed government intervention. And then there's also the sense that maybe this promise of government cash being available if needed means more profits for shareholders or for the company, and then eventually dividends for shareholders because they'll be building out more generation. But certainly, if you're one of the gentailers and maybe you were worried Shane Jones's big talk about breaking you up was going to come true, you'll have breathed a sigh of relief when you realised all you were getting was a letter from the minister kind of lightly scolding you.
So, Mark, household customers, business users, they must be kind of looking at this news and thinking, well, what does this all mean? In the end, are my prices going to go down or are they going to just keep going up?
Yeah, Simon Watts, the energy minister, said when he made the announcement that some of these moves will put immediate downward pressure on energy prices, which is kind of hard to believe. He specifically cited the LNG facility procurement process, but while the government wants that to be in place by winter 2027, which is still a long way away, so not next year, the industry's own report suggested even with full government support, it would take at least 3 years from the point of a decision actually being made, which won't be made until December at the earliest. So realistically, we're talking winter 2028 at the earliest for when this thing is here, if the government even decides to go ahead with it, if there are even a commercial basis for it. There's really not a lot in this package of reforms that takes place quickly. So it's hard to see how power prices start coming down really quickly.
That's it for today. The Detail is a newsroom production supported by RNZ and NZ On Air. This episode was engineered by Jeremy Ansell and produced by Alexia Russell. Thanks to Mark Dalder. I'm Sharon Brett Kelly. Ka kite anō.